This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion.
Somebody found the episode I'm going to play today and posted it on X, Twitter, said they really liked it. Blast from the past episode from a market wizard. Got a lot of views on X, a lot of listens. So I figured, you know what? Makes a lot of sense. Let's replay it right here. I hope you enjoy.
Before I jump into my guest today, I have a request. This whole podcast process, and it's a process, not just the guests that you listen to, not just my monologues, but the process of attracting better and better guests. You can help me. How? First off, email me recommendations. Top flight minds, good talkers. Send me your ideas. Number two, and everyone can do this, and it truly will help my podcast get more recognition, more listeners, which will make it much easier to get good guests. Not that I've not had good guests already. I have. But I want continued good guests. What can you do? Go to iTunes and write a review. No excuses. Get off your butt. Write that review. Now for my guest. This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Today on the podcast, I have David Ryan. David was famously first featured in the Market Wizard's book by Jack Schwager. He's also a protege of William O'Neill. That's where he got his start. In fact, how he got his start is inspiration. Just do it. I hope you enjoy this conversation. So here's what I want to start with, and I want you to go back in time with me, is that a lot of people hear these kinds of stories and they say, oh, really, that's not how it worked or whatever. But you essentially got in the door by knocking on the door and essentially saying, I'll do anything. I'll work for free. Am I going the right direction? I mean, this is how you initially got started.
Yeah, I see. The way I really got started is, my interest is, I had my dad, he was in real estate, but he would actually buy stocks for a college fund, and he would discuss them at dinner and talk about how he'd, and this was in the mid to later 60s, where he would say, oh, I just bought some stock in this, new franchise of chicken called Kentucky Fried Chicken, or he bought some stock in Disney and things like that. And so my brother and I got interested in the market, and I actually had a trial subscription to Daily Graphs, which was the precursor to MarketSmith from William O'Neill and Company. And I actually, started looking at the market and had a subscription to Value Line and things like that. So I was very, very interested. I bought my first stock when I was 13 in a candy company, just 10 shares of a kind of stock that made Bit-O-Honey and Chunky candy bars. So I had this ongoing interest, and I even went to, O'Neill would give some free lectures every once or sort of free seminars in the on the west side of Los Angeles every once in a while, and I think my mom or my dad took me to that, and so I watched and I listened, and when I got out of college, when I graduated from UCLA, I had a job on the Pacific Coast Stock Exchange at that time, and after working as a runner there for a while, for just a couple of months, I said, why don't I just why don't I just try at O'Neill and Company to get to see if they have something available there. And so I basically just walked up the front stairs of the company and went to the receptionist and said, hey, is there anyone here I can talk to about a part-time job, internship, anything? I'll work for free. I just want to learn how William O'Neill's made so much money in the market. And sat down with his assistant for about a half an hour and told her some of the books I had read and how I was interested. And even before I got home that day, there was a message saying that to call Kathy Sherman because she wants to set up an appointment with you with William O'Neill tomorrow to interview. And I had never been on an interview in my life. I don't even remember what I wore. And I don't even think I went in a jacket and tie, but I went in, and all I just kept on saying is, I just want to learn. I've heard you've done well in the market. I've just got a fascination with the market. And so I started part-time, got my foot in the door, was just really loved it, able to ask questions, study past recommendations, and then that worked into full-time, and I ended up spending almost 17 years at the company.
Let me circle back for 1 second. So you're a young man. At this moment in time, it might be your first interview, but this is seriously important.
I think I was so naive. I've got a very strong Christian faith, and I think that things don't happen without reason. And I just almost feel God was directing me to this company, to this occupation. It was an inborn interest I had in the market. I just became fascinated with the market, and I think I was just very naive. I didn't know how important or how well it would have worked out, but it's amazing how the pieces just came together. The fact that William O'Neill and Company, his offices were on the west side of Los Angeles, which was 15 minutes from where I grew up. He actually lived almost around the corner from me. And so there's just so many coincidences where I just can't say, oh, that just happened by chance. But I would almost say I just almost didn't know. I was almost too naive or not smart enough to know exactly what I was doing.
Serendipity sometimes just happens. Hey, one more question about that though. Was there anything during that initial conversation with him that you recall that struck you where you're like, okay, I'm now having this meeting with this very successful investor. Did he say anything during that first conversation where it just struck you like, oh wow, that lit you up in a way? Or you just don't really recall?
No, some of the questions, one of the questions I remembered, he was asking questions. Well, what are your goals in 5 years? Do you want to go to do you want to get an MBA? Do you want to go to a business school? And I, again, I had never answered, really didn't know. I just said, I have got a real big interest in the stock market. And I'm fascinated. I want to see why some stocks go up and make great runs and others go down. And I just want to learn, and that's all. And I also said, you don't have to pay me because I've been in school since I was 5 years old, and now I'm 20 some odd, and my parents wouldn't mind if I lived at home and for another year and didn't pay rent, and so I went at it that angle. So that's really what I remember from that interview.
Let me bring things up to current day. You've been running your own private hedge fund for many years now. And how would you best describe, given that early background and training, but how would you describe your approach, your style of trading today?
Okay, just one correction. I actually I had a hedge fund open from 98 up until last year. Now I'm just running my own money. But I had the hedge fund for 15 years. I was at O'Neill and Company for almost 17 years. But my approach, very William O'Neill, can slim type of approach, where I'm looking for growth stocks. I'm looking for stocks with the greatest characteristics, of the greatest winners of all time. And I continue to do that. Maybe I've gotten older and a number of responsibilities in terms of home and family and such, that maybe I've gotten more conservative in my approach, but I'm still looking for those types of characteristics found in the greatest winning stocks.
So in my world, I've put 5 books out about quantitative trend following, which is a kissing cousin, I would think, to CanSlim in many ways. But why don't you talk about the idea for the audience out there that maybe is not familiar with CanSlim? Why don't you talk about the idea of buying the breakout versus buying the dip and the thought process there? Because I'm assuming, and I'm not a CanSlim expert by any stretch of the imagination, but finding those good growth stocks, that's a lot of a breakout mentality, and it's buying strength is part of that process. Is that correct?
Yes, it's part of the sort of the CanSlim, which is an acronym for the different characteristics you look for. Is one of them is N for new highs in price, and that's the thinking there is that any stock that makes a huge move, that makes stock that makes a run from 25 to 125 has to be making a new high on the way, every penny on the way up. And so, and the thing about when you're buying at new highs is that you have no overhead supply. There's no one ahead of you, no one at higher prices who have bought, who are looking to sell. So anybody who owns that stock when it gets into new high ground has a profit. And the only people that are selling are people that are taking profit. So there's no overhead supply. So that's one of the characteristics that were found in stocks that made some of the greatest moves. But you just don't buy a stock just because it's making a new high. You have to look for a stock that's been basing for a number of weeks, and then then the stock has to have all the other characteristics found in the greatest winning stocks.
Before I ask this next question, I want to circle back to, as you were describing the ending of your money management firm, there's got to be a side of you that also enjoys the fact that you don't have clients now.
Oh, it's I had really some of the greatest clients. I mean, I had probably close to 70 clients, and a lot of them just said, "Hey, look, I'm running my business. I'll call you in 10 years." And very, very few calls ever. The only time I knew when the market was getting close to a bottom is when I would get 2 or 3 calls in a day. But a lot of clients I would rarely talk to during the year, and but all very nice, and didn't really. The only pressure that I really felt was really more self-imposed and kind of a level of performance that I thought I should have. But I still, the greatest thing now is that I can still enjoy the market, still look for those greatest winners, but not have that feeling like I always have to get the performance. If I don't like the market or what I like or what I'm seeing, I can just sell out and step away for weeks. So it's a lot more relaxing, but it's still a lot of fun to do.
I want to talk about big picture in a second, the perhaps changing environment that some traders may describe since 2008. But before I bring that up, I want to maybe let you paint a picture of some stocks from your perspective that have fit your model, that have really taken off. What have been some good CanSlim winners in the last 2 or 3 years from your perspective? Some of
the better winners have been stocks like Chipotle, Mexican food, symbol CMG. Priceline is another one. Apple, maybe not recently in the last year and a half or so, but that was just really, a great model of a stock to look for. And I would always, I always like to, when people ask me, well, where do you get your ideas? And I always found that the best ideas I can find are usually the ones where I'm actually buying the product, using the product, shopping at the store, or using that service, because you can have a lot better feel for what they're doing if you're able to touch and feel the product itself. So those are some of the examples. Sometimes when you get into something that's very high tech or even a biotech that can be hard to understand for the layman, then those are harder stocks to really stay on to for the longer term move.
You mentioned Priceline, and I've always been a fan of Star Trek, and but William Shatner, he really picked the lottery ticket with Priceline.
Oh yeah,
he did fabulous at that. Probably one of the best investments any actor in LA has ever made. Probably fantastic.
Exactly.
Yeah. Hey, listen. So big picture wise, what's your max loss that you're willing to take on a position? You initiate a new position, first time you're in it. What's your max loss you're willing to take?
I've really cut my losses short. I mean, I usually don't let them even go beyond probably 5%, and a lot of them even less than that. And if I have maybe one, if there's something that I have to keep on working on, is actually giving a stock a little bit more room, because that's cutting it very, very close. Lots of times, I've always said that the best stocks I own are the ones that I've timed them so well. I've gotten the buy point down to such an exact spot that when I buy a stock, in most cases, by the end of the day, that stock should be higher. And I usually cannot live with a stock or live with a loss for too long. I mean, even days I start getting a little nervous that, maybe the stock, the timing wasn't right, or that I didn't buy the right stock. And so the best stocks for me are always the ones where the timing is, I'm buying it coming right out of a proper base, and the stock starts taking off and goes. In the arena of novice investing, or perhaps people that come to the investing world for the first time, it's pretty well known that folks think that a high accuracy, my entry signals are 95% accurate. That seems to be, when people first come to the markets, they think this is a natural way to be, that perfection. But the reality is, in your world, what type of winning percentage do you really see? Oh, if I can pick 50% winners, I think I'm doing a good job. I mean, if I get into the 60s, that's fantastic. Because a lot of those stocks that I take the losses on are very, very small losses. But then if I can get, and if an investor can get, 1, 2, or even 3 really good stocks in a year, they can have a fantastic year if they just keep those losses small. I think what people get into is they start defending a position that they've got a loss in. They start making excuses. They can infinitely rationalize why they should continue to hold on to the stock. But the key is that got to keep their losses small, because you just don't want it to get bigger. I mean, a stock goes down by a third, and I think the mathematics you have to come back 50%, or if a stock goes down 50%, you have to double your money. So that's why I keep them very, very small. The loss is very small, and then sooner or later I'm just going to time a stock right. I'm going to get the right theme and the right industry, and the stock's going to make a great move. And if I handle it well and add to a position that's working out, then that's where you can really make some very, very good money.
Let me add to the risk management questions. You take your account, and I'm assuming this advice would apply to other people out there. You're saying, hey, put 10% into the markets and put the other 90% in cash. Be willing to lose that 10%. Don't lose your whole bankroll, but be willing to lose that 10%, but put the other aside.
You mean in terms of managing a whole account? Well, the way I usually think about it, when I'm starting a position, I'm starting with about a 5% position, and within even a day or a couple of days, I might, if the stock starts working out, I might move that up to a 10% position, and that's there. Maybe I get a little bit bigger, but usually I take my account and I divide it into 10 pieces. And as some of the stocks start working out well, then they start becoming heavier and bigger positions. If a stock makes a nice move from, let's say, 25 to 35, builds a whole new base and starts moving again, that stock might be a 20% position or even a 25% position if it's been performing well. But it only gets to that large of a size of the portfolio after it's already made some money for me and I've already got a cushion. But on initial positions, maybe it's usually a 5% position. If it doesn't work out, I'm out of it very, very quickly and I move on to the next name, or I just continue to watch that stock. Maybe it sets up again and maybe I go back and buy it again.
Let me shift gears again on you. And what I want to talk about is everything that we've seen. And I've talked to quite a few investors, traders over the last 6 months of my podcast. And to a man, to a woman, you can kind of tell that, yes, people have their systems. Yes, people have their approaches. But there's an uneasiness about the overall market system since, let's say, '08. And I think I always say to myself, I was like, well, when the government starts to bail out banks and save some companies and not save other companies, and then when you have significant Fed action in the markets, and maybe even action that we don't even know about, there's some distortions. Now, that's not an excuse, and I'm not a fundamental guy per se, but it is a reality that there's been things that have taken place in the last 5 or 6 years that are unique, maybe, in the history of American markets. How do you look at the last since '08? How does it make you feel when you look at the whole situation that's unfolded?
I don't like seeing government involved in the markets. I think the market should take care of themselves in terms of them getting in and bailing out companies. There should be I think one of the best things that happens in the U.S. economy is companies can fail. They can go bankrupt. And I think you cause all sorts of distortions when you start propping up entities that maybe shouldn't have existed. With that said, some of the changes I've seen, or some of the way the markets have been moving since 2008, in terms of the high frequency trading, is something that I don't like. And looking into it, it looks very illegal in terms of front running. And I think that when there's an illegal practice going on the market, then I think that should be addressed and that should be eliminated, because I just see moves in stocks, and the speed that stocks move have been a lot bigger than they have in the past, since probably 2008. With that said, though, the stocks that have the characteristics of the greatest winners really does not change. They still have these canceling characteristics, but they do take a lot. The volatility of some of these moves are a lot bigger, and it's been very, very hard to get used to some of the volatility in some of these stocks.
It's interesting times for sure, and I think maybe deep down in our gut, we all know that at some point in time, something unexpected and surprising will happen. I don't know given that I've seen twice in the last 15 years that when Fed has dropped the interest rates so low, and we've seen big moves, and then something happens. I don't know what will happen or when it will happen, but I think something will happen at some point in time.
Yeah, every time I read that I saw it just even the last couple of weeks, thinking, some people saying there's just going to be a big hit down on the market. I say, when everybody seems to be talking about it, I kind of tend to say, it's probably not going to happen. But again, with that being said, even when I was in the market in '87, when we had that crash in '87, and then we had some dramatic drops starting in March of 2000, and then starting in 2008, that it usually doesn't hit a high and the next day it goes straight down. Usually it takes a few weeks, if not a number of months, for a top to form, and then the whole market to roll over. So I don't expect it to come out of nowhere, as long as you got individual stocks that are acting well, and you've got markets that are hitting highs, that you usually get some warning. Maybe this time it'll be very quick, but if we do get that large correction, you're going to start seeing it show up in the individual stocks and in the averages.
I have one last question for you, and I can hear it in your voice. I hear it in your personality, but the market is humbling, isn't it?
Oh, yes. I've always said that the stock market is one, and any markets is the most humbling mechanism in the world, because anytime you think, oh yeah, I've got this down, I've got it, I can't miss, the market's my own little pot of gold, that's right when you get your head handed to you. I think the greatest thing, the best thing someone can have is an attitude when they walk in is that you have to take your ego, you got to throw it into the trash can, and you have to say that you have to have a discipline, no matter what approach it is. It could be growth stocks, it could be value, it could be day trading. You have to have a discipline to get the emotion out of the market, get your ego out of the market, and you should almost be acting robotic-like, where you see the information, your discipline tells you what to do, and you act on it. Anytime the emotions come in, the ego comes in, greed, fear, and the whole thing comes in, that's when you start doing very, very poorly in the market.
I think it's sound advice. I know everyone can pick up untold number of books, and they can pick up one of the books that you were famously profiled in, the Market Wizards book, and we can all read the words, but I think it's sometimes nice to hear people say it. And just it's a reminder, and it's very true. Hey, David, I know you've got a seminar in the fall with Mark Minervini. Do you have the details of that, or is there a place that people can go to find out more information?
Just Google Mark Minervini, private access. Mark's got a website which you can go to, and there'll be details on that website where it's a 2-day, well, almost 3 days. We start with a meet and greet on Friday night that go Saturday and Sunday, and this is October in Myrtle Beach of late this year. It's a great 2-day seminar, and Mark is extremely detailed. It's got a huge workbook that we go through, and I'm up there with him, pointing out things, adding to the discussion of what to look for in stocks that have these characteristics that I've been talking about. But it's a great workshop. I did it last year with him. Great people and some very good discussion. And he's constantly making it better and adding new sections to the workshop. So I'm looking forward to doing it with him, and it should be great interacting with the people that attend.
David, I appreciate you taking the time today, and it was fun chatting, and hopefully we can talk again in the future.
Okay, that'd be great. Thank you very much.
You're welcome. Take care.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.